something intrinsically of value sitting behind it, and I think that's the
Let's talk about what you do for Kinesis in terms of the physical side. The quarterly announcement came out and announced the presence of the physical mint officially, but we know it's been in operation for a while. Yeah, tell us a little bit about that.
So obviously, Tom put me into this kind of position at Kinesis for a couple of reasons. Obviously, number one, running Bullion Capital, I've been exposed and have partners in the physical side of the market for the last 8 years. So I have a large distribution net. On the other, and from the previous business of doing IT, I've been very, I have a large experience sitting in distribution. So Kinesis, we put the mint together. And now it's my job to work out how we, distribute that product globally to our clients across the world. And I think it's a great, bear with me, what's the word I'm looking? There's a great connection between the two because, on one side, stackers can take physical delivery. You can have something in your hold in your hand. At the same time, we've got this great digitalized product, which is the stable coin, which you can spend in everyday life.
Don't call it that. we coined the term asset-backed digital currency on purpose because we knew there's problems with Tether, so stable coin to me has a yeah.
Come on, Jim, say that again. I like that.
Asset-backed digital currency.
Asset-backed digital currency.
Yeah, yeah. So I mean, it is a form of stable coin, but I think it's a lot more.
Well, it's there's something intrinsically of value sitting behind it, and I think that's the importance. And I think that the beauty of it is, I've seen for a lot of people there's a complexity when you go to your typical bullion dealer, because let's just take an example. You get some fantastic bonus, you get $20,000, and you're like, great, I'm going to invest this into physical gold because I want no counterparty. Yes. So you go down to your bullion shop and you try to purchase your bullion, and it doesn't really matter. You can't get a kilo bar because that's trading at 65,000. So you have to start, maybe it'll take 400 grams. So you got to buy 400 gram bars, and you got to pay your premium. You take that home. That's great. But when you need, $50 next week out of that reserve, you've got to sell 100 gram bar, and pay that spread every time. So I think that's the real beauty, is it allows people to allocate capital in a way that they're used to, very simply, very cost effectively, into gold, and come back out if they need that capital. And in these turbulent times that we live in, nobody can be sure that you're going to make a purchase of an asset and say, oh, I'm not going to need that for 10 years. The world is not in that nice stable state at the moment. We've all seen, we've seen the risk of kind of sell off in the market for exactly that. Everybody is, concerned and want to be sitting in some cash. Quite rightly so.
Yeah, so sitting in cash, and so I think some people are looking at Kinesis and the physical mint thinking, well, why are they doing this, right? They're running a digital product. Why kind of promote the physical side? But I think you'd agree, I know Tom agrees, it's the cash equivalent, right? So a bank's no good if you can't withdraw your money and put it into cash, right? So like you did in Cyprus, taking that money out, put it in the safe. The equivalent would be either spending your KAU and KAG to buy a physical product or redeeming it.
Redeeming it for your physical, and then being able to bring that back. You can redeem that. You can redeem and buy our physical product, put that in your safe at home, and when the time comes, redeplosit that Kinesis material back in, have receive your KAG and then go out and spend it.
Yeah. Yeah, I remember I was talking to Tom about this. He says, well, yeah, it should be your decision when you put your gold and silver into the system and when you take it out. You should be able to do that whenever you want to. And
I think that differentiates us in a huge way to where a lot of people say, oh, well, I have exposure to gold through an ETF.
Oh, yeah.
Right? And it's like, even if you take, Sprott have I would say probably one of the better ETFs out there in the market, and you look at the mechanics of making withdrawal, you can't do that as, Joe Citizen. As a hedge fund manager, yeah, I can go and get a 400-ounce bar, no problem. But, not everybody has $400,000 kind of dollars sitting around in that position to go and get a, COMEX 400-ounce bar out. So we've tried to build this. It's also for the everyday person. And I think that's, if you look through where Kinesis is sitting in its market space with its project in Indonesia, we've gone out with that project to support the unbanked. We want this to be a system that's not just for the rich and wealthy, but for every common person to use, and a better system, exactly as with a sound money system, where your money can't just be bailed in or disappear electronically in a flash, where someone pressed delete and that $1 million account suddenly went down to 100,000.
Yeah, and if you're worried about the power going out, or you're worried about the something happening to Kinesis or whatever, you can withdraw your funds, your money, your real money, and keep it safe, kind of thing. So how's this interact with the Kinesis, the asset-backed digital currency? So these products, they're not in the vaults backing the currency for the most part. I think because silver's 100-ounce bars, kilo bars. So the physical mint products might go in the mint for those, but like 1-ounce coins, for example, or 1-ounce rounds, those aren't in the vaults backing KAG. So what's the interaction here with the Kinesis ecosystem?
Clients will be able to purchase them. Obviously, as you go down in material size, there's a material cost.
Right.
So cost of production, obviously, the cheapest thing for you to purchase if you're buying gold and silver is a kilo bar, because it's the simplest thing for somebody to manufacture. They just need to pour out their kilo of gold, or if it's 100-ounce silver bar, 100 ounces silver bar. Normally it's actually underpoured, so it's a tiny bit under the weight, and then a tiny bit of silver is added to get that exact measurement. As you go down the kind of line, the cost goes up. And I mean, I think everybody can see this example really easily. Go look at the price of spot silver, and go look at the price at any bullion dealer online of a 1-ounce coin. There's a big difference in the premium, and that premium kind of has to pay for the manufacturing, the process of actually minting the coin, plus the transportation, and at the end the dealer's cut as well. So that premium is everybody getting paid along the way to bring you that product.
Right.
So that doesn't make sense for Kinesis to, let's say, stack up 1-ounce coins in there, and we would, it wouldn't financially make sense. We would have to increase our premiums to cover the 1-ounce coin, which then would detract from the value of Kinesis having a very tight spread.
Right.
So you can convert, your currency into that, and we will be launching that through our own Bullion, or through the Bullion shop, and through our distribution channels, where clients can come and purchase either with fiat. Maybe they don't want to interact on the platform. They're old school. They just want to convert their cash into bullion and put it in their safe. So we can interact with those clients directly, or they can use their digital currency to, maybe they want to pass a gift. I mean, just to give you an example, you want to instill in your kids the value of, sound money. So you buy them all a 1-ounce silver coin and put it in their hands. That way, if you just give them the, what's it called, virtual credit card, well, they're going to go and spend that. Sometimes it's nice to have something in your hand and hold it, and it gives you an understanding of of value, and it's sitting there. It's not a quick trade to dispose of it instantly. You got to go down to your local bullion shop and sell it. But that's actually kind of for me, I think that's a great incentive about owning physical bullion. If it's just cash, I can run down. I have to really make a conscious choice and say, okay, I need to now, I need to liquidate. I want some cash for whatever purpose, or I want to go and make a purchase. I need to go and take my bullion, sell my bullion, get my cash, and make that transfer. And for me, that's a great savings policy, because it makes me, do I really need to spend this right now? Yeah. That process where if it's just, oh, let me just on my credit card stick the digits into a website, the transaction's done. I know when I save with my my personal life and with some of the bullion savings, it's just sitting there in a coin. It's like, oh, I have wealth, it's there, but I can't go and waste that on beers down the local bar, or a night out for dinner. And I'll be like, for a night, no, I'm not selling my bullion for that. If there's an emergency, of course, then I might be dipping into that fund. But it has that stickiness, which I think is great. I think it's great installing that. Since we started the mint, I think everybody who's had a child recently, my partner's like, what are we going to buy for a present? I'm like, we're not buying a present. We're giving them a silver coin. We're going to start there, we're going to start a lesson of Uncle Ed and his silver coin, and pass those around.
Yeah, and you it's the Kinesis Mint that did the Citizens for Sound Money coins. That those came out beautiful. The 5th ounce.
I've got.
Oh, there you go.
Yeah. So they're super shiny. We're excited about them.
I'm away from home in Czech, and I happen to have a Kinesis round sitting there. It travels with me in case I need to give someone a gift. It's like, yep, I'm gonna give you something heartfelt that comes from my hard efforts.
Yeah, so, and it may be fluffy, but I do that too. I think there's value in just keep putting it out there and sharing the money and the feel of it. And my friends are probably tired of hearing about it. And I'm like,
I want to share this because I think you'll find this. So in Cyprus, we have the IFX, which is a large conference for Forex brokers. So a lot of these guys, they're brokers and they're utilizing, I have the same problem every year that people come up to me and say, we can supply you with liquidity. And what they mean is they can send me a paper price that people can trade on. And they don't understand. I'm a physical dealer, so I'm like, okay, I'll take 10 tons when, what's your price? Let's back up the truck. And you just see their face like, oh, what do you mean? I was like, well, I'm not selling you XAG USD, as just a financial instrument. I'm talking about real liquidity and real silver. So I typically walk around those events, and I'm known for doing it with a kilo of silver with me. And you will be surprised. Anytime I pull that out, you have CEOs of these big companies, and they're standing around me like I'm a kid in a candy store. Oh, let's have a go. And these other brands have spent so much money doing their marketing, and come look at my booth, and I'm there just with a bar of silver. I'm like, oh yeah, and everybody starts. Can I pick that up? Oh wow, how much is this worth? And I'm like, you're a company, you're a broker. You should know the spot price of silver and be able to do a quick calculation. And they just look at me blankly, and I'm amazed at that kind of disassociation of the financial world when it comes to physical metals. And there's some allure. I don't know. I think everybody's been the case. If I know a 100-ounce bar is much more typical in the US than the kilo bar, but it's a 100-ounce bar is a heavy piece of kit. Even if you've seen a kilo bar of gold, people don't expect it. It's the size of your iPhone. It doesn't look like much until you put it in your hand, and you're like, oh, a kilo. All right, so I know you're not fully integrated onto the metric system, but one of those large bottles of soda, those are like 1.5 or 2 liter bottles of soda. But in your hand, it doesn't feel like much. Although the weight is more significant than the gold, the density catches people, and people don't comprehend that until you have it in your hand, and suddenly you have that. I don't know. It has just a certain feeling.
I remember I handed my wife the 100-ounce bar that I got redeemed from Kinesis, and she goes, "Why is it so cold?" You go, "It's not cold; it's room temperature. It just conducts that well." You know?
Well,
Yeah, yeah, definitely. When you're talking to people about sound money, I used to talk about this stuff all the time, but if you actually put some silver or gold into their hands, it's a different conversation. Definitely encourage people to do that.
I have a joke with some of my clients because they said, "Oh, that's all great. It all makes so much sense, but when there's a real crisis, how am I going to go and buy, food from my local grocery store?" And I was like, "Well, the great thing about a kilo bar of silver is if you just kind of take a good throw, it goes straight through any window, and you can go get what you want."
So what kind of impact have you seen or do you expect to happen with like Kinesis yields? Like, is there an interaction? Is there velocity being generated from the physical mint?
That's a great question.
I might have to answer my own question because
you might have to answer your own question on that one.
Yeah, so I know Silverback is paying for product with KAG, right? So we're actually minting the KAG. If we get dollar payments from our customers, we turn those and mint them into KAG and then send that to you. So there's a minting transaction. We're earning KVT from that. And then there's also the transfer to you or Bullion Capital for the payment. So,
and the amazing thing is it's instantaneous.
Oh yeah, it's beautiful. And eventually, I think where this hopefully is going is, your local coin dealer would accept KAU, KAG, and so and that eliminates pricing risk for them as well, which hopefully can reduce the spreads from the typical physical spreads. But you could cash in your coins for KAG or vice versa, use your KAG to buy coins, I think eventually. So, rather than have to do a redemption from wherever the vault is in New York or, buy stuff online or ship it online, eventually people could be doing that digital to physical process at their local coin shop. That's my
your local coin shop would become the equivalent of your local bank.
Yeah.
In that sense,
Yeah.
And I don't think they would ask as many questions when you turn up and say, "Oh, I would like to purchase, $100,000 of material." They'll have a big smile on their face. "I'm going to pay you in, KAU and KAG, and I'd like 100,000. Can you deliver that to me?" It's not going to be the same question as when you go to your bank and say, "Can I have 100,000 out in cash?" And they, it'll take a few days, and please talk to the bank manager, explain what you're doing.
Yeah, because that's a big difference, right? That $100,000 in cash that you want to take out, they're using that to go lend to someone else and to have on their balance sheet, and they're using that to make money. They don't want to give it to you, right? But Kinesis, it actually costs them money to do the vaulting. Like, if you want it, sure, here, take it.
By all means.
And then if you're redeeming that lowers the holdings, which increases the holders yield for everybody else. So that's a good thing. So yeah, it's a really interesting the way the system's structured is where it really encourages physical holdings as well as the digital. The digital for liquidity and for divisibility and for tighter spreads, but for that comfort and security and anonymity, then you have the physical side as well.
And I think it's such a great offering in the sense that you don't have a storage fee. Last year we paid a 6.99% yield, which there's no bank out there offering that, and I don't have the counterparty risk of a bank. Those three things put together, it just makes it a yes.
Right.
It
that
makes a lot of sense, and I think I have a slightly different mindset in the fact that as we've discussed, I've lived through this bail-in, and it scars you in a sense. Even now, our banks in Cyprus are there was no compliance. Right? They had no compliance whatsoever. Now they've become over compliant. So they're so scared to do anything. If you said the word, I don't know, you want to send money from a Coinbase, you made some profits in crypto and you want that to come back to your bank account, they won't allow it. They're like, no, it's from cryptocurrency. But I haven't done anything illegitimately. I bought it, Bitcoin at $5,000 and I sold it at 60 and I made this profit. I just want to relocate that into my, no.
Yeah, we actually were shut down by 2 payment providers, failed to get a third one. And it was because of this involvement with the, crypto space. At least for one of them, we think it's for all of them. And so we started to like tone down some of our website and stuff. Then we stopped and realized, no, like we've gotten to where we were because of this involvement. So we've managed to just do everything without it. So we have a plugin where people can pay with KAU, KAG, or other crypto. And we've done quite well without having, I mean, we do have a traditional bank account for some things, but it's not for our core operation. So it's been really neat to be able to do as much as we've done with Kinesis rather than a traditional bank.
I think we're in that period for everybody where we have to bridge both systems.
Yes. Yeah.
You can't go about everyday life. I still can't go down to my local Starbucks and buy my cup of coffee with a Kinesis coin, even though there's what $20 of value here, and the coffee's well, inflation is probably $20 as well by now, but $7 or $8.
We learned that in Las Vegas it cost you about an ounce of silver to get a cup of coffee.
Oh, it was crazy. Vegas was like where I see the rest of the country heading in 6 months to a year. I mean, everything was so incredibly expensive.
I think everywhere is feeling it. We just saw today the Bank of England did a 50 basis point raise as well. So everybody's running to tackle inflation, which I mean, for me, they cause their own inflation. This massive money printing and stimulus is the reason why we have inflation. So I find it quite comical that they said that, oh, it's only transitory and we don't know what's pushing this inflation. It was like, well, you kind of created it. Come on, guys.
Well, and not only that, they created it on purpose, right? Mm-hmm. The debt to GDP was so high that you have to inflate the debt away. So you keep interest rates low and you inflate it away. It's just, so they wanted it, but now that it's a political problem, now they don't want it, but they do anyway.
I have a strong feeling that we will see a 180. My question that I keep posing to myself is, who is going to buy U.S. Treasuries? I don't think Russia has any more appetite. China don't seem to either. Saudi don't look like they want to be putting their oil investments in. So, who's going to buy U.S. government debt? And then it comes down to a very clear choice to me is, do we let the government fall or do we devalue the currency? Right. And history has told us time and time again that the government will stand and the currency will fall.
Yeah.
So that's been the bet. That's kind of how it's progressed historically, and I have a feeling that will come again, and that inflection point isn't so far away. We're what are you now 2.25%. Once you start getting into that 3 and 4 area, those treasuries are going to have to be rolled over, carrying a 4%, and there's been a lot of short-term treasuries issued during the COVID area. All that has to be pulled on. National debt is going to become cripplingly high. I don't see that turn. And my personal feeling is when we have that turn, gold and silver are going to, I don't want to say go to the moon, but take off and have a very strong period again.
Their insurance premium will increase.
I definitely see that. And it's funny because I have a lot of investors come and say, oh well, gold's done its move. It's into a better right. And I was like, nothing goes up in a straight line. It's always a staircase, and we're just in that, that nux of the step before the next kind of leg up. And if you see, people cite the 80s, if you see where gold went in the 80s, from that kind of $300 up to 1900, as over that 10-year bull run or 15-year bull run, I think we've seen the first leg, the beginning innings, where we've gone from that 1300 up to 2000 and come back a little bit. But I definitely think, the space to go is there. And, silver is the more volatile, and when gold performs, silver performs that much better. So, I think I've always looked at it, gold is not there to make you money. gold, gold has been the stable asset that's always sat at the core in the center, and gold doesn't move in price. Fiat currencies move against gold. An ounce of gold is always an ounce of gold, and it will stay an ounce of gold. If you own 400 ounces of gold, and the price goes down, by 5, you still own 400 ounces of gold. Nothing has changed except that the pricing in fiat. But silver gives, I always feel, the opportunity for great gains, and then being able to convert those gains back into your stable into gold. So silver always has got, it's more volatile. You definitely have to have a strong stomach to trade silver. That's why I like to buy physical, because it just sits there. I never feel like, oh, something's gone up or down. I had that many ounces last week, and I still got that many ounces sitting in the safe.
Yeah.
But I think that's, if there's one thing I can impart to your listeners is, start your money definitely is not safe in a bank. There's always risk, and you have to start considering that and start digging into how money itself works. And once you understand, I think anybody who spends the time looking into and understanding money will understand why gold and silver are of such significance and importance. Yeah, you'll find your own way to that, but you always, the yellow brick road is a yellow brick road, and it takes you to gold at the end, because once you start questioning everything, it really does just suddenly jump out and make sense that gold and silver are the true currencies, and I said, our final payment, our final settlement.
Yeah, and it reminds me of people making fun of you when you took cash out. A lot of us gold bugs make doom and gloom predictions and stuff. It doesn't mean it's going to happen, right? Is the dollar going to zero, or is it going down 50%? I don't know which it is, but
good to have some insurance.
If there's a chance, right? Exactly. If there's a chance of a catastrophic outcome, doesn't it make sense to, provide some security against it, right?
I spend money.
The banks aren't going to fail. How are you 100% sure? Is it 99%? And if it's 99%,
I'd love to be wrong.
Yeah.
I pay for house insurance every year. Right? Cyprus, we're on an earthquake zone. Nothing's ever happened to my house, but I still pay for that insurance. Right. I don't understand when it comes to sometimes with gold, people say, oh, well, that will never happen to the financial system. Wouldn't it be wise to have, and it doesn't actually even cost you anything, this insurance. That's the beauty of it. Every year I've got a premium to pay this guy that my house might collapse or might not, but every year I got to pay him. Gold and silver doesn't cost you anything, except a bit of time and research to go and make your purchase, and either, hold it in Kinesis, or hold it at home, or hold it in your hand. But, you don't have to go down the dooms and glooms day approach. It's just, I would say, a sensible suggestion for modern day. And I'm on the same opinion of holding some cash. Having a little pile of cash. There's nothing, they've been propagating in the media that cash is only for criminals, and you should, in Europe, if you try to, even if you turn up that we have a 500 euro note, you can't use it anywhere. It's practically useless. Even the 200 euro note, if you go into most supermarkets, they won't accept it.
Yeah.
So you got to go to a bank to change your 200 euro, and they're doing their best to push people away from holding cash. And what's nice is the one thing that's nice in Cyprus, you still see it every day, is at the grocery store, this old little farmer is buying his groceries, and he will just pull out of his pocket a wedge of cash. Because he gets his money, and he just takes it out of the bank, and he has it in his pocket, and he feels comfortable, and he pays it off. And you see, especially Europeans on holiday, they're so surprised. They're like, wow, he's got so much, he's got like $3,000 in his pocket. Isn't he worried someone's going to rob him? And thankfully, despite all our calamities, Cyprus is a very safe country in that respect. But they have it in their pocket because, and one of the reasons they have it in their pocket is something we haven't touched on. Cyprus is divided, and there was a war that broke out where the island became divided, And so these people live through that experience. So they have this mindset of like, I better have something in my pocket in case war breaks out and I can, I can flee, I can run. And, and that's, they've gone through that particular experience, and it's scarred them. So they're always like, I'm going to have a pile of cash in my pocket. So if, the next minute Turkey invades Cyprus again, or war breaks out, I've got something with me of value that I can make my escape and start. Because that's literally what a lot of them had to do last time, is flee for their lives with whatever they could grab hold of,
Well, the banking system stole more from you than any pickpocket.
Yeah, that's definitely true.
All right,
and,
I think,
and it's I think that's no. Go ahead, Jim.
I think we should start to wind up. Marian, do you have any last minute questions? I think what you had said a second ago is a great conclusion to it, of the motivation to get some insurance for yourself, to make sure things like what happened to you don't happen to the person, our listeners, right? Marian, you had any last?
Yeah, I mean, that's what I usually ask. I usually like the practical steps, and I like to ask what people are optimistic about. And I think, like we were saying, I hope we're all wrong. I hope we don't need the insurance, but that's the point of insurance, right? Like, you plan for the worst and hope for the best. And I appreciate your upbeat attitude, despite having been through some of the worst parts of it. So, I mean, I think that's what gets us by.
And you know what the great thing about the insurance policies are? They're beautiful and they're shiny, huh?
Yeah.
Isn't that just,
old. And like
it's old.
And they hold their value over thousands of years. So, all right. Well, thank you.
I think that's exactly the practical steps of, owning some bullion, owning some cash, and having your plan. Think of it as a plan B. Hopefully you never need it, but it's always there. The same as, our home insurance, our medical insurance, we all hope that we never need them, but it's worth having them.
Yeah, definitely. All right. Well, thanks, Ed, for coming on. Thank you so much for your time.
Absolute pleasure.